Monkey have a problem. Not a banana shortage problem. Not a leaf counting problem. The problem is more strange than that. Monkey want bananas today, but monkey only have bananas coming in next season. And season is a long way away. So monkey sit under tree and think. Monkey think hard. How can monkey eat today when the bananas are tomorrow? This is not a new problem. Every monkey in the jungle faced this same problem at some point in their life. Young monkeys face it when they want to build a new nest. Old monkeys face it when the harvest was bad. Even the big fancy monkeys at the top of the canopy face it when they want to expand their banana grove before the fruit comes in. The problem is always the same. The bananas you need are not where the bananas are. They are separated by time. One set of bananas is here, in the present. The other set is there, in the future. And between them is a gap called time. What if there was a machine that could close that gap? A machine that could reach into the future and hand you bananas today? That machine exists. Every monkey uses it. Most monkeys just don't know that's what they're doing. The machine is called an interest rate. Monkey banks sit in a tall stone building in the center of the jungle. Monkey bank have a very specific job that controls everything. Monkey bank decide how expensive it is to move bananas through time. That's it. That is the whole job. Everything else, the inflation, the growth, the crashes, the booms, all of that is downstream from that one decision. How much does it cost to borrow tomorrow's bananas and use them today? That is the question Monkey Bank answers every single day. When monkey want to borrow from Monkey Bank, the conversation go like this. Monkey say, monkey need 100 bananas now. Monkey grow 110 bananas next season. Deal? Monkey Bank say deal. The 10 bananas extra is the price of time travel. That 10 banana difference is the interest rate expressed as 10%. It is not a penalty. It is not a fee for being irresponsible. It is the cost of intertemporal allocation. That phrase means the movement of resources across different points in time. Monkey take present value from the future and pay for the privilege with slightly more future value than was borrowed. The gap between what monkey borrowed and what monkey repays is the price of reaching through time. Now here is where the story gets interesting. Monkey Chief sit above Monkey Bank. Monkey Chief run the whole central banana operation. And Monkey Chief have one lever. One single lever that changes the price of moving bananas through time for the entire jungle. When Monkey Chief pull the lever one way, time travel get cheap. When Monkey Chief push it the other way, time travel get expensive. This lever is what economists in the human world call the federal funds rate. In the monkey world, it is simply called the time leaf rate. And the decision of where to set that rate ripples out to every single monkey transaction in the entire jungle without exception. Here is what cheap time travel looks like. Monkey Chief lower the time leaf rate to almost nothing. Suddenly Monkey Bank is offering to move bananas through time for almost zero cost. That 100 bananas from the future? Now you only pay back 102. For 2 bananas you get an entire season of banana purchasing power right now. What do the monkeys do? They go wild. Every monkey in the jungle start pulling future bananas into the present. Young monkey build the nest. Old monkey expand the grove. Merchant monkey hire more workers. Banana cart monkey order 3 new carts. The whole jungle is running on bananas that have not been grown yet. This is what liquidity preference does to an economy. When the cost of holding your bananas in the future instead of spending them today is very low, every rational monkey choose to spend today. Money velocity increase. Activity increase. The jungle buzz with energy. Everything moving fast when time travel is cheap. But here is what nobody talks about. Cheap time travel has a hidden price. It is not on the invoice. Monkey Bank not mention it. Monkey Chief not put it on the sign outside the stone building. The hidden price is this. When every monkey borrow future bananas at the same time, the future gets lighter. The future has fewer and fewer bananas available to allocate because they have all been pulled into the present. Real economists call this the opportunity cost of capital. In the monkey world, it means something simple. Every banana monkey spend today from the future is a banana that cannot be spent again when tomorrow actually arrives. Merchant monkey find this out the hard way. Merchant monkey borrow 400 leaves worth of future bananas when the time leaf rate is at 2%. Merchant monkey build a massive new banana warehouse. Fill it with inventory. Hire 12 workers. Everything going great. Time travel cheap. Future bananas arrive in the present. Business booming. Then monkey chief, pull the lever back. Hard. Time leaf rate go from 2% to 7%. Now the cost to borrow 100 future bananas is 7 bananas, not 2. Merchant monkey still have the warehouse. Still have the 12 workers. But the calculation that made the warehouse make sense was built on cheap time travel. Now time travel expensive again. Merchant monkey need to reprice everything. The present value of the warehouse has changed. Not because the warehouse got smaller. Not because bananas disappeared. Because the discount rate shifted. Discount rate is one of the most important concepts in all of banana economics. It is the rate used to calculate what future bananas are worth in today's leaves. When the discount rate is low, future bananas are almost as valuable as present bananas. The gap is small. Time is cheap. Future feels close. When the discount rate is high, future bananas lose a lot of their present value. You have to wait longer. The jungle is less willing to fund your future. This is why when Monkey Chief raise rates, Banana Grove investments collapse, new construction stop, and long-term projects suddenly look foolish. Not because the projects are bad, because the price of time just went up. Every calculation changes when the cost of tomorrow increases. Monkey stand in the middle of all this and try to understand what is happening. Monkey watch the jungle speed up when rates go down. Monkey watch the jungle slow down when rates go up. Monkey think this is about confidence or mood or whether monkeys feel happy. But it is not about feelings. It is about physics, economic physics. The price of time is changing. And every calculation every monkey makes is secretly a calculation about time. Monkey neighbor stop by the nest. Neighbor monkey say, why Monkey Chief raise rates? Monkey Chief hate us. Monkey say no. Monkey Chief try to slow down time travel. Too many monkeys borrow future bananas. Future getting thin. Neighbor monkey say, future getting thin? Monkey say, too many bananas pulled into present. Future left with too few. Price of everything go up because present has too many bananas chasing same goods. Monkey Chief raise rate to make time travel expensive again. Slow down the borrowing. Let future rebuild. That is the whole mechanism of monetary policy transmission explained simply. This is not a complicated idea dressed up in fancy language. It is a jungle-level truth about how the central bank works. The central bank raises the cost of moving bananas through time to slow down the jungle's demand for future resources. Demand cool. Prices stabilize. The yield curve, which is basically a picture of what time travel costs at different lengths of journey, begin to reflect a more balanced future. Short journeys cheap. Long journeys expensive. Or sometimes flipped, which mean the jungle is very scared about the near term and more relaxed about the far horizon. That inversion is its own story, but the yield curve always tells you what the jungle thinks about the price of time at every distance. But here is the thing that hit Monkey the hardest. Monkey realized that every single time Monkey have ever saved leaves, Monkey was doing the same thing in reverse. Saving is not just being careful. Saving is pushing present bananas into the future. Monkey give up bananas today. Monkey bank hold them. Future monkey receive them back with a little extra because future monkey did without during the waiting. Time preference is the fancy name for this idea. Time preference is how much a monkey value present bananas over future bananas. Most monkeys have strong time preference. They want the banana now. The interest rate exists partly to reward the monkeys willing to delay, to compensate them for overriding their natural desire to consume today. Without that reward, almost nobody's safe. And without savings, Monkey Bank have no bananas to lend forward through time. The whole system is one continuous loop. Monkeys who save push bananas into the future. Monkeys who borrow pull bananas out of the future. Monkey Bank sit in the middle and set the price. Monkey Chief sit above and adjust the pressure. When the loop is balanced, the jungle grows steadily. When the loop breaks, when too many monkeys borrow too aggressively or too many monkeys hoard without lending, the jungle either burns hot or freezes cold. Monkey News broadcast from the big tree in the center square. Monkey News say, Monkey Chief hold emergency meeting. Jungle inflation rising. Leaves losing value. Action expected. Monkey turn to neighbor and say, time travel getting taxed harder. Neighbor monkey look nervous. Monkey have mortgage on nest. Monkey say, everybody do. That is the point. Because the point is not that interest rates are a policy tool in some abstract government machine. The point is that the rate lives inside every single nest, every grove expansion, every season's harvest plan, every decision to save or spend or borrow or wait. The rate is the invisible price tag that time itself is wearing. Monkey Chief is not controlling monkey behavior directly. Monkey Chief is controlling the cost of tomorrow. And when tomorrow costs more, monkeys naturally choose today less. Every rational monkey responds to the price of time without even knowing it. Monkeys sit back against the tree as the jungle settles into the new rate cycle. Monkey think about all the times monkey borrowed without thinking about the time inside the loan. Monkey think about all the times monkey saved without knowing the leaves were making a journey into the future. The math was always right. The math is always right. The only question is what price for time you assumed when you ran the numbers. That single assumption changes everything about every financial decision. The central bank does not control growth. It does not control confidence. It does not control whether a monkey want to work hard or plant more groves. It controls one thing: the price of the gap between today and tomorrow. Everything else the jungle does is a response to that single number. That is what interest rates actually are. Not a reward, not a punishment, a price. The price of time itself, charged in bananas, paid in seasons. And as always, apes together strong.